Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock and Sofi Technologies SOFI stock. We will begin by talking about how Palantir has landed two very lucrative new contracts which should really excite investors. Then we will discuss the latest PLTR stock news and perform some stock analysis. After that, we will discuss the latest Sofi stock price targets, why analysts believe that Sofi stock is oversold right now according to stock indicators, which provides investors a great buying opportunity, and lastly, we will go over and talk about why a billionaire just bought into Sofi stock. Go and press the like button right now for more Palantir stock and Sofi stock news updates. Comment your thoughts down below on how a billionaire is heavily investing and buying into Sofi stock. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. The big data and analytics company named Palantir Technologies, ticker symbol PLTR, has recently announced that Space System Command has given Palantir another contract valued at $43 million, which is actually an extension of a previous award. The SSC liked Palantir's technology so much that they wanted to continue to do business with them and use their platform to deliver data in a secure and efficient manner. According to Palantir, this award provides continued capabilities for Project Brown Heron, which enables all-domain situational awareness and decision-making at NORAD/US Northcom and the Space C2 division under the Cross-Mission Ground and Communications Enterprise. The Palantir platform, known as Warp Core, is being utilized to make decisions from large volumes of data in support of these missions, end quote. In a nutshell, this will enable the client to support deliveries, have in-depth analysis at their fingertips, and provide Palantir's client with data-driven solutions. Overall, this will simplify data management practices and integration. The global defense lead at Palantir Technologies had this to say about the deal and technology, so I quote, "The threats to our nation in and through the space domain are very real, as we have seen in recent weeks. We must continue to advance our nation's space domain awareness capabilities," end quote. By now, you've probably heard the famous saying from legendary investor Warren Buffett to be fearful when others are greedy and to be greedy when others are fearful, which basically means to buy the dip. But I personally like to dollar cost average into the market regardless of the amount of fear or greed, and also buy the dip. We can now exercise this advice because the PLTR stock has just entered an RSI rating of below 30, which is an indicator measuring fear, and this tells us that the stock is now considered oversold, which is a great buying opportunity for long-term investors. The PLTR stock has a 29.3 RSI, and to put that into perspective, the S&P 500 has an RSI of over 42. The good news is that Palantir stock will not stay beaten down for long because they also landed another contract with a natural gas pipeline company named Kinder Morgan, which uses Palantir's Foundry platform to manage their pipeline storage system and to help the company meet safety and efficiency goals. With Palantir having two new contracts under their belt on top of a low RSI rating, the Palantir stock price looks very enticing as a buying opportunity. From the press release for Kinder Morgan, it says, "With real-time access to this information, Foundry will enable Kinder Morgan to make data-driven decisions on gas storage, optimization, and maintenance scheduling." The CIO of the company also complimented Palantir by saying, "In our business, we put a premium on doing things safely. To be able to also move at such speed is extremely valuable," end quote. So overall, this is pretty good news for Palantir, but now let's move on to talk about Sofi Technologies, ticker symbol SOFI. Sofi is an industry-disrupting financial technology company that offers basically anything that a customer will need in terms of loans, credit cards, or investing, which is why 3 research analysts have given Sofi stock a clear buy rating. This was also backed by their great Q3 earnings report, where they brought in $277 million worth of net revenues, along with a base of 2.9 million users, on top of a total of 4.3 million products being used. Product utilization per customer has increased substantially quarter over quarter, which means that not only is SoFi attracting new customers, but the customers that they are landing are using more than one SoFi product, which in turn puts money into SoFi's pocket. The reason this is happening is because customers are so satisfied with SoFi's products that they attract them to buy even more. Currently, SoFi is very dependable on their lending and loan business segment, which brings in around 80% worth of their total revenues. But as their other segments start to pick up more steam, like we have seen recently in their most recent earnings report, we can see that now lending only makes up 75% of their revenues, which is always good news. SoFi also improved their net loss, which was around $43 million in Q3 of last year, to only a $30 million net loss for this report, which is a fantastic improvement. So with SoFi financially improving due to their distribution of revenues throughout their business segments and customers buying more than one product or service, SoFi is set on a great growth trajectory. Even a Morgan Stanley analyst issued a buy rating for SoFi stock mainly due to their bank charter catalyst coming up, which is supposed to be completed in the first quarter of 2022. This will give SoFi a plethora of various advantages, but I specifically want to highlight their FDIC insurance and the fact that this bank charter has the potential to boost their revenues by up to 10% in the first year. According to Morningstar analysts, SoFi stock has a fair value price of $22 per share, and the current SoFi stock price is around $16, which means that the stock is way oversold right now, which could lead to a great buying opportunity. Just think about it. SoFi Technologies currently has a stock price target of $19 on the low end and $30 on the high end, and with this current stock price being below both the low end price target and the fair value price, this is a clear buying opportunity for long-term investors. SoFi is a rapidly growing company, and they have not grown into their valuation yet, which means there are risks here. Also, SoFi does not pay a dividend, which means they are using the extra capital to grow the company. But because SoFi is still in its infancy, we should be aware of the risks associated with this company and the stock. By looking at SoFi's Form 10-K, Form 10-Q, and from the Form 20-F, we can conclude that SoFi Technologies has 101 risks associated with the stock. To put that into perspective, the S&P 500 index has 31 risks associated with it, so SoFi is about 3 times more risky, but this makes perfect sense because an index is way safer than investing into a single stock. SoFi's main risks come from their finances and various regulations. However, their finances will be improved as the company gets more revenues and becomes very profitable. Also, their secondary risks, which are their legal and regulatory risk, will calm down after their bank charter catalyst, because without this bank charter, SoFi has to operate by different rules in every state that they operate in, but once they have the bank, they will operate by a single set of rules across the board, regardless about what state they're in. Basically, as time passes, some of these risks will naturally dissipate. Now, what really should excite investors is that a mainstream billionaire named George Soros has purchased around 177,000 shares of SoFi stock for around $3.2 million. And this has gotten Wall Street's attention, because when George Soros invests in a company, he is very serious and he sees great long-term potential in SoFi Technologies. Overall, Wall Street is pretty bullish on SoFi stock with no sell ratings, and the majority of analysts actually have buy ratings on the company. According to Wall Street, SoFi has an average price target of $25.50, which will give investors around 56% worth of upside in just a single year if they invest right now. Now, if you do decide to buy SoFi stock, it would be good to have a plan, which requires you to answer questions like, can my portfolio handle the risk of another single stock? How much money and portfolio percentage does my risk management allow me to buy of this company? Am I overexposing myself to too much risk by buying more of this stock? How long do I plan to hold this company? Is there a low-end price target where I would sell my stock if the price drops that low? Or, likewise, is there a high-end price price target where I will take profits and sell the stocks if it reaches that high-end price target? Or am I going to hold the stock forever no matter what happens because I believe in the company that much? These are the types of questions you should contemplate and think about before even investing into any stock or index. Now, I also want to disclose that I personally hold SoFi stock and Palantir stock, but they do not take up more than 3% of my portfolio each. This is not because I don't think that they're good companies, because I think that they are, but it is because I have a plethora of many other great companies in my portfolio, and I have very conservative risk management policies in place that prevents me from overexposing myself to any single stock. But what do you think? Comment your thoughts down below, like this video right now if you haven't already, subscribe if you are new, and I will see you in the next YT video.